Welcome to TheoTrade. This is Don Kaufman here doing the weekend update for January 14th, 2017. Let's get right to it. First and foremost, we're going to start with a quick review of some of the action we saw last week, or lack thereof. This is what I've been terming the zombie marketplace. But more importantly, looking forward, a few things we're going to discuss. A bit about earnings. Okay, we're going to actually look at a trade in Facebook and a trade in the volatility product, which is going to be the VIX. So first and foremost, let's get right to it here. The SPX. I like to start with just a quick glance at the previous trading week. So on Friday, really quiet trading session. When I mean quiet trading session, for those of you that don't follow per se the S&P or the S&P futures, they barely did over 1 million contracts. So we're like almost 2 million contracts in the S&Ps. Incredibly quiet trading day on Friday, coming of course into this holiday weekend. US equity markets, of course, are closed on January 16th in observance of Martin Luther King. They'll reopen, of course. There'll be limited futures hours on the 16th, but they'll reopen, of course, on Tuesday, January 17th. Now, getting back to it. So, if you looked at this past week, you'd think to yourself, we're grinding a little bit higher. Did we really? Okay. So I'm going to go over to the Analyze tab, and I want to take you back to, and I love to do this just to look at some end of day data. Ultimately, what you're looking at right now happens to be, last weekend. So looking at the trade date there of January 6th. So again, we're just over a week ago. Here we are today, January 14th. And again, I'll just elaborate on this a bit. Here's our calendar. Here we are on the 14th. This is last week. Where were the S&Ps? Okay, it's a great place to kind of start off. The S&Ps were trading 22.76. Where did we end up on the week? Well, it's right there. 22.74. What did we do? Absolutely nothing, which is pretty much what the market expected. We were looking at about a 22-point swing all week, higher or lower. And yeah, we stayed, in a relatively tight range over here. And more importantly, again, I like to take a quick glance back, but I also like to be extremely forward-looking. What good is the history of a week that did absolutely nothing? But again, I keep terming this kind of the zombie marketplace, and I'm going to talk about that here for a brief moment, what that ultimately amounts to. So let me close up there that left side bar and take a look at the SPX. One of the reasons I'm calling this kind of the zombie marketplace, no matter what has been thrown at the marketplace, and you look at this past week, there were a number of economic announcements that didn't do anything. Literally didn't do anything. I don't think I've seen less of nothing during economic announcements. There, of course, was the press conference from the president-elect Trump. The S&Ps briefly sold off the day after that, but rallied back up. So it was a whole lot of nothing over there. Late in the week, we actually had some breaking news in the markets. Absolutely nothing. What was the breaking news late in the week? The bank stocks. The bank stocks released earnings. Bank of America, questionable at best, but it doesn't matter. You can be and have the most degenerate management team right now in the banking industry. So long as interest rates are going up, it just does not matter. And by the way, that was no reflection on Bank of America's, management team. Okay. It's not as stellar, of course, as Wells Fargo, but nevertheless, it didn't matter what these banks made. All right. They didn't do anything. They actually rallied a bit on Friday and then sold off. But overall, again, the market did a whole lot of nothing there. The reason, again, I'm calling it a zombie marketplace, they're throwing the world at the marketplace in terms of news announcements, so forth. And look at these volatilities. Okay, I've seen some pretty low volatility in my time, but here's 30 days out, and you're looking 30 days out. It's like it's not even an 11 vol. Okay, are they not seeing what the rest of us are seeing? And that is, are there some headwinds to the marketplace? Not necessarily like headwinds, but think about all the uncertainty, if you will, after the inauguration. Okay, listen, there's a new administration coming in. It's gonna be Friday. By Saturday of next week. Just be a little bit forward looking here for just a moment. And we're talking like Saturday, January 21st, policies are going to start changing. Whether you like it or not, no politics involved here whatsoever. And the fact that implied volatility out in this range over here, right? Here we are 16 days out. There's January 30th. What is it? Like a 9%. And for those of you who don't read volatility, that's like a 9 VIX for the next 16 days. It just doesn't necessarily make sense. So I'm looking at this earlier in the week and I'm saying, wow, these volatilities are just incredibly low. And then I noticed, well, yeah, apparently a lot of other traders feel the same way, and that's why they're buying the heck out of volatility right now. Now, if you've never looked at this before, it's the VVIX, it's the volatility of the volatility index. The volatility index, all right, really kind of bottomed out a little bit. Now, what this is it's measuring the volatility of the VIX itself. So this doesn't necessarily mean that the market's going to tank. It doesn't, okay, portray anything other than the fact that there are traders that are buying volatility, okay? Why? Well, they could be hedging. They could be hedging their risk because maybe they see something coming. Number two, why else could they be buying volatility? Could be buying volatility because volatility is just rock bottom, right? Okay, why else? Well, some of them may think that the market's going to tank, but don't look at them buying volatility as we're going to tank. That's not the reasoning behind it because, you know, I can point out right back here, well, they were buying volatility back here as well, and we caught that, but that didn't necessarily mean the market was going to tank. The market dipped for like all of 2 days in late December, and it was all over but the crying at that point. But just be aware, there are buyers of volatility at this point in time. But again, we've kind of seen that movie before. What's a little bit unique though this time is they're buying volatility. I've also noticed skew. Now, if you guys have never looked at skew before, what skew measures is it's out of the money puts versus out of the money calls. And when the skew is high, and it is getting higher right now, it means there's more put buyers, okay, the supply and demand, and that puts become expensive relative to the calls. And again, skew is only on the SPX, meaning it's the only thing it's measuring is the SPX options. So the VVIX is measuring the volatility of the VIX, okay, and the VIX happens to be the volatility of the SPX, then skew is measuring the out of the money puts versus the out of the money calls on the SPX. So both of them kind of in confluence right now, displaying there is more risk coming into the marketplace. Neither here nor there, but it's something to kind of think about. Now, we'll look at a trade, okay, in just the next few minutes here for that. Now, on top of the fact that, yeah, there's an inauguration coming, you know, I'm sure everybody's excited for that. I mean, it feels like it has been, it legitimately feels like it's been months and months and months since the election. And you look back over here like, you know, wow, it's 2 months, okay, that have passed of an explosive rally to the upside. We haven't done much since, well, about a month ago. Markets are just grinding sideways, okay, whether you want to look at the SPX or I've been looking a lot at the XLF because the financials drove the vast amount of this rally over here. What have the financials done? What have you done for me lately? Nothing out there, okay, and again, the rest of the financials, they're going to have earnings coming early this week. Neither here nor there. So again, I view this as there's always, you know, risk on the table out there, right? But in a circumstance where, again, you have a new administration coming in and so forth, and the number of policies that are about to change and the uncertainty to see like an 8 or 10 VIX is just, it just baffles you. And again, the VIX itself is at 1123. So one of the things that we're going to look for, and by the way, not only do we have, you know, the inauguration and so forth, you realize you also have earnings of the vast amount of the S&P 500. Earnings are really going to kick off this coming week, okay? Netflix is one of the stocks that's going to have earnings. You know, Netflix, this plain and simple, and I'll talk about this a bit more as the week progresses, but Netflix right here, this is the widow maker of earnings plays. If there's one thing I'm going to tell you, just don't sell options naked around Netflix. You know, I spent 15 years in the brokerage world, okay, in kind of the regulated brokerage world. And in my 15-year, career in the brokerage world, I never saw one individual stock hurt more people than Netflix. And hey, I like to enunciate that kind of stuff here on TheoTrade. That's the kind of stuff that you never hear from like the brokerage world. Like they never come out and they go, wow, Netflix really kicked the living crap out of tons of people in the marketplace. But in terms of like a stock where people sold options, Netflix, that's number one in the equity market. That really is. It's number one in the equity market. So in index markets, probably the SPX. The SPX is also, that's the 800-pound gorilla in the room over there. But Netflix is probably the number one equity. And if you've ever looked at a chart over here, again, just look at this as a stern warning. This is a gap-filled wonderland from which there is absolutely no escape. It's like the black hole of people that want to sell options premium naked. Be aware of it, right? And by the way, it's option statistics. It's still a relatively low IV ranking on there at 44%. All right, enough with the earnings. Again, if you ever want earnings, just scan for them. Just kind of cruise through and scan for earnings real quick. You got American Express and Bank of America, which already released, and GE and IBM. But again, when it comes to fun stuff that's got earnings this, coming week over here, Netflix, that's a fun one. The week after is going to have a lot more in technology, but just a quick scan. All right, next thing, and then we're going to come into more of a volatility trade. The next stock I want to look at, Facebook. Facebook. All right, what has Facebook done in the last couple of weeks? The absolutely parabolic move. Listen, okay, when I say something's parabolic, it's just ever increasing, velocity to the upside over here. This thing has got a better chance of getting out of Earth's atmosphere than does SpaceX right now. Although SpaceX just had a really spectacular launch today. All right. Anyway, the velocity of Facebook, is it sustainable? I don't believe so. However, got a big fat earnings announcement coming up. So when you start looking at the options chain inside of Facebook over here, okay, first and foremost, big trades in Facebook on Friday. The IV percentile is about 50%. Okay, the earnings are coming up in the February 3rd expiration. Okay, so this is the expiration. I'm actually going to avoid it. What I'm doing is a very short duration in out spread, where I'm actually going out, okay, and just buying a $2 wide spread. Now, I was able to buy this, and I've got a couple of them on in here, but I was able to buy this thing. I've also got a Facebook position on. I bought a few of them at right around $1, a couple of them at 99 cents. I'm going to go bidding for more of them on Tuesday. So if Facebook opens up on Tuesday, I'll be able to grab a few more contracts of this particular trade. You can see some size trading on here because, well, we were trading this pretty readily inside of the TheoTrade chat room on Friday. Again, I'm buying the 130s. Okay, I want to make this clear. Buying the 130s, selling the 128s. I want to trade it right around $1. It's an extremely short-term trade, right? It's got the next 13 days, which really only has 9 trading days in it. So in 9 trading days, can this stock back off below 128? You don't have to look at too much technical analysis in here to know that this thing, it's overbought. The fractal energy is down. It's overbought. Can the stock still explode higher? Yeah, but I think it's a reasonable shot out there. All right, last but not least, and we're ripping through a lot over here. It's the great thing about a video. If it's too fast, just rewind it a bit, okay? Last but definitely not least, I'm looking to bid up again in the VIX. What am I doing in the VIX? I'm going to be buying call spreads in the VIX, okay? Apparently, I'm doing this just like everybody else on the street is doing it. Remember, as I started this conversation over here, if you take a look at the VVIX, right, the VVIX, there are definitively buyers of volatility. Why? Well, again, everybody wants to, I guess, make these subjective kind of conversation around why are they buying volatility? Well, it's either a hedge or they think the market's going to tank, period. Like, you don't have to think too hard. It's one or the other. And it doesn't matter. A hedge is just reduction of their own risk. Okay, so they buy some volatility. Or some people think the market might tank out there. So what do? Buy some volatility. Again, they did this right before the presidential election over here. You know, they did this right before Brexit. It goes on and on and on and on, right? So here's the presidential election. Okay, here was actually 1 day of volatility. Nevertheless, there are net buyers of volatility. That's all we need to know, okay? Given that, and the volatility is just incredibly low with what looks like just this myriad of risks that are facing us, I want to get long volatility, and I'm willing to take the risk in doing so, even if it exposes me. Now, one of the more convoluted products in the market is the VIX. And people always ask me about the VIX, and we've done days, literally days of education surrounding volatility and volatility related products. I know a lot of people, they don't like the VIX, so they go over to like the VXX. Okay, what a lot of people do not realize, the VXX is even more convoluted than the VIX product. Okay, and then they're like, I want me that, you know, UVXY or the SVXY and yada, yada, yada. Listen, real carefully here. Every single one of these volatility products, whether it's the VXX, whether it's the UVXY, which is the, you know, UVXY is the Ultra VIX, right? Or whether it's the SVXY, which is an inverted product, whatever they are, okay, they are all based on and a derivative of the volatility future itself. They're created from the volatility futures. So if you read the prospectus of a VXX or a UVXY and yada, 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 all the other products out there, okay, the products use the volatility futures themselves to create the ETF. So the purest version of this trade, when I say the purest version of the volatility futures trade, if you want to trade the volatility future, you can, okay? But it's kind of a big contract out here. But so, you know, all the way out here, we are now looking at the volatility contract. If you take a look at the volatility contract, it's trading right at around 1570, okay? Now, the VIX options here, okay, in February and March, these things are based not on the VIX. And I just can't stress this enough because it confuses everybody. The VIX has nothing to do with the options on the VIX, meaning like the VIX itself is inconsequential. It doesn't matter what the last price was, $11, okay? This March option is based on the volatility future, which was trading, okay, at 1570. All I'm going to do in here is I'm going to go out, and you can see I've actually got a couple of positions in here, and I'm building net positions out, okay? So all I'm going to do is buy the 15s, okay? Sell the 17s. I'm just going to pay 60 cents, $2 wide spread for 60 cents. It is, okay, a spread that I'm willing to buy for 60 cents. If it goes out worthless, it goes out worthless. This is a trade where we're taking a shot with the expectations that volatility really picks up in the next 66 days. I mean, if you look at it this way, kind of ironic, but volatility really can't go down anymore. So I think it's a very worthwhile position. And the volatility future is already trading at 1570. I mean, the spread is technically, you're buying the spread for 60 cents, and the spread is already in the money by 70 cents. Okay, so it's a 15-17 call spread here for a 60-cent debit. Again, if you're ever curious about the VIX, the coaching sessions that we have here at TheoTrade, we've got a 4-day, okay, broken up into segments over there. I say 4 days. It's about a 4-hour, okay, total segment just talking about the VIX, the volatility futures, the VXX, the UVXY, all, okay, the vast number of products that are surrounding the VIX, okay. Personally, I like to trade the purest of those products, which is the VIX itself, which again, it's based on the volatility futures. The VXX is based on the volatility futures. Gets a little convoluted, but again, I want to be net long volatility, especially coming into the to the next couple of weeks. And you know, hey, listen, when you're going to buy volatility, you do it before the market gets volatile. Okay, there's no humming and, you know, hawing over this. Either you pull the trigger when we've got a low volatility situation, okay, or you're never going to get the opportunity to do so. And that's one thing that I get constantly in terms of emails. You know, when you're looking at like a 9 vol or 11 vol out there, this is the time to pull the trigger and get long volatility. Again, it's clear, it's decisive. Somebody else is buying volatility. All we're going to do is jump on the bandwagon, right? We looked over here, somebody else is buying volatility. Doesn't mean we're going to tank. But okay, kind of like our odds in this one. So thanks everybody for joining us here at TheoTrade and the weekend update. Again, look out for the earnings. Of course, you got Netflix, the widowmaker of people that sell options naked. We've got a Facebook trade over there, kind of a bearish in-out spread on Facebook just for the next 2 weeks. And number 3 over here, the VIX. Get long volatility for the next 66 days. Sit back and, well, let's see volatility roll in. Thanks everybody for joining us here. Have a great weekend. Bye-bye.